Wall Street enters the last week of September on a weak note. The S&P 500 and the Nasdaq are on track for their worst month since December last year as the hawkish Fed, rising yields and surging crude prices pressure equities. Stocks in the Asia-Pacific opened mixed ahead of key inflation data from Australia, Japan and Singapore. The GIFT Nifty is also implying a lower start for the Indian market. Crude breaks a three-week gaining streak. Brent prices consolidate around $93 a barrel as markets weigh supply cuts against expectations of lower demand due to higher for longer rates. Government considers feedback from laptop, tablet and personal computer makers, likely to give time till November 2024 for import restrictions to kick in, provided companies register and share import data. Final decision is awaited. That's an exclusive. Delta Corp gets hit with GST demand notices worth over 16,800 crore rupees. The company says the demand is arbitrary and it will pursue legal remedies to challenge the same. SBI meanwhile raises 10,000 crore rupees via infrastructure bonds at a coupon rate of 7.49%, while Bajaj Finance's board will meet on the 5th of October to consider a fundraise. Good morning in the Mumbai News Centre. I'm Sonal Bhutra. You're watching Power Breakfast here on CNBC TV18. Well, those are the top headlines that we are tracking. It's a fresh new trading week after cuts that we saw in Friday's trading session. But first up, as always, let's take a look at what the Asian markets are doing. Largely mixed, and that is after the weak handover that we got from Wall Street. Nikkei is the one which is high by 0.6%, but Taiwanese index is also seeing some gains. Seng, meanwhile, is seeing cuts of 1.1% as we speak. Across the Asian markets, it's largely a red, barring few markets. Kospi, for instance, is down 0.5%, and so is Shanghai, which is lower by 0.2% as we speak. The GIFT Nifty, that'll come up for you on the screen, and if we compare it with Nifty futures, it is implying a start in the red. 20 points lower is what GIFT Nifty's implied open is suggesting as we speak. Let's talk about the US markets now. Wall Street indices marked a fourth day of losses. The Dow Jones gave up over 100 points while the S&P was down about 10 points and the tech-heavy Nasdaq was down close to 12 points. With this, Wall Street has entered the last week of September with losses. Stocks have struggled this month as the Federal Reserve signaled higher for longer interest rates, sending bond yields soaring. The benchmark 10-year Treasury yield has surged more than 30 basis points so far this month. Okay, on that note, let's hear out what Andrew Hollenhorst, chief U.S. economist at Citi, makes of the Federal Reserve's latest policy action.
The economy is proving to be very resilient. And what the Fed needs to do, and I think what they indicated at their meeting they will do, is keep financial conditions tight. The issue that they'll have if they don't hike in November, maybe they could do it in December, November more likely, is they've indicated in their dot plot, in their median dot, that they're going to hike another 25 basis points. If they don't follow through with that hike, then the markets will ask the question, is this Fed really serious about keeping rates higher for longer? And even though it would be inconsistent with their guidance, markets will say, you know what, if they don't hike in November, maybe the next move is going to be a cut. And that's the risk that they have. So I think that just biases them to doing that final hike. Again, it's very much on the margin in terms of does that affect the economy. 25 basis points one way or the other isn't going to be determinative for the economy.
Okay, all right, that's the global market action. Looking like a weak handover from Wall Street and the Asian markets as well. But how will these overnight cues impact our own markets? We have our research team joining in to tell you just that, what the trade setup is looking like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Ekta, let me come across to you first up. What is the market setup looking like today?
Thanks for that. Well, like you mentioned, it is a bit of a sluggish global environment, which I'll get to in just a second. But in terms of a recap, in terms of what took place on Friday and last week, the markets did decline for the fourth straight day on Friday. The Nifty was down 3% last week. It was the worst weekly fall that we've seen in around 7 odd months. FII's net sold around 1,300 odd crores. DII's net bought around 801 crores. Now, overall, the street has been weighed down by factors such as a possibility of a future rate hike from the Fed, oil prices rising, as well as the FII selling for our markets. So overall, the US was a weak handover. We have Asia, which is mixed at this point in time, and the gift Nifty, which is indicating an implied open in the red. Now overall, watch for the oil prices, because last week it was a fall for the first time in 3 consecutive weeks. So let's see whether that sustains. Currently $93 per barrel for Brent crude. PSU banks remaining resilient, because that's what we saw in Friday's trading session. And the impact of JP Morgan adding Indian markets, Indian bonds to the EM market debt index, it could spur more such moves. So the news with regards to that would be watched out in terms of the incremental sessions. Also, just watch for the focus on defensives as well as large caps, considering the kind of weakness that we're seeing for our markets, as well as any further news with regards to the India-Canada relations and maybe any kind of sentiment impact for us. Macros this week, we have a lot of inflation data from the globe, but separately from the US, we have GDP as well as initial jobless claims to watch out for.
Okay, all right. That's a market test setup. Thank you so much, Ekta, for joining us with that. But a lot of stocks which will be on our radar as well. Abhishek has that list.
Well, to begin with, Bajaj Finance, they will hold board meet on 5th of October to consider fundraise. Apollo Tyres has resumed operations at manufacturing unit at Limba. Grasim, they have had an incident at their Century Rand plant, which has resulted in 2 fatalities, some injured and 2 are yet to be accounted for. Sequent US FDA inspection has been received for Vishakhapatnam facility. 483 form has been issued with one observation, which the company says is in procedural in nature. Deep Industries, they have received a letter of award from ONGC for an estimated value of rupees 108 crore. Sri Renuka, they have acquired 100% in Anamika Sugar Mills. Primary infusion is about rupees 100 crores. So Strides, they have received US FDA approval for Sapent ethyl capsules. Market opportunity over there is US $1.3 billion. SJVN, the board has approved a monetization of partial earnings of NATPA or Jakri hydropower station through securitization of its future ROE. Delta Corp, they have received GST notices worth rupees 16,823 crore. This is for the period between July of 27 to March of 2022. Blue Star QIP, good names have invested over there in the QIP. The names are like SBI Mutual Fund, Abu Dhabi Investment, HDFC Trustee, etc. Karnataka Bank, they will raise funds of about 1,500 crore, of which primary issuance will be, preferential basis issuances will be about 800 crores. Borosil, there is delay in receiving delivery of imported equipments from Europe on or before 31st of Jan 2024. And Ircon, they have signed, contract with Sri Lankan Railways for an estimated value of rupees 122 crores. Back to you.
Okay, all right. Those are all the stocks on our radar today. But let's talk about the FNOQs. Manglam is joining us now. Manglam.
Well, if you just take a look at the way the markets have moved over the last couple of weeks, a lot has happened, yet a lot hasn't. If you just take a look at it, in the last 2 weeks, the Nifty has moved point to point, just about 50 odd points. But in the interim, it went upwards of that 20,222 mark as well. And from there, in the last 4 trading sessions, you call it routine profit taking, some froth being taken off, or some volatility in global markets, we've corrected about 3% from the highs itself. In just the last 4 trading sessions, we've seen the FII selling pick up as well. In 4 sessions, they've sold almost $1 billion, and on September 22nd, 1,300 crores in the cash market. The Nifty Bank has been a key underperformer, down almost 4% in the last 4 sessions, and that's largely led by HDFC Bank itself. This is an important week. The September expiry week begins today, and in light of that, the FIs continue to sell in index futures as well, and that has amped up particularly in the last 1 week. 1,100 crore worth sale on Friday, and from the peak of 66%, the FI longs have now come down to around 53% itself. In index options as well, there's been more call selling than put selling, telling you on the way up there could be some bit of congestion. Where are the call writers active? 19,800 and 19,700, telling you that levels upwards of 19,800 to 850 would face some resistance on the way up. However, there is support on the way down. 19,700 put as well as the 19,650 put, both of them active, telling you 19,600 thereabouts could see some support despite the gift Nifty implying an initial downtick at the open. The Nifty 20-day moving average is 19,700. We have the 50-day moving average at 19,630. So that's the range that the street is working with in terms of a narrow move. And the Nifty Bank, however, is close to a 100-day moving average of 44,500. Just keep an eye out on Delta Corp. A lot of news on the stock, and the stock is in FNO ban.
Oh yes, that stock will be on our radar. Thank you guys for joining us and prepping us up for this trading day ahead. Going to be a crucial trading day again. Time for a short break now. When we return, government is likely to give time till November 2024 for laptop, PC and tablet import restrictions to kick in. We'll get you more on that when we return. Stay tuned. Welcome back. You're still tuned into Power Breakfast on CNBC TV18. Now it's time to get you an exclusive story. The government has proposed that laptop import restrictions will be introduced only by late next year. Ashmit is joining us with more details on this one. Ashmit, what are you picking up?
Some relief on the cards for the IT industry. The government has proposed that the import restrictions may be introduced only in November of 2024 and will be gradually ramped up by November 2025. Sources have told CNBC TV18 that the government will consider allowing imports of laptops, personal computers and tablets only after registration and disclosure of import details. After being introduced next year, the curbs are likely to be linked to the manufacturing capacities in the country, and the deferral of the curbs will give PLI applicants more time to set up units in India. The restrictions were scheduled to be implemented from 31st of October. While global giants are up in arms, domestic phone maker Lava has welcomed these restrictions.
Changes are required nevertheless.
Sure.
I think from my perspective, we missed the previous bus on growing the manufacturing and the other ecosystem in India, and that bus was actually taken by China. Could have been ours at that time, right? There would be some of these inconvenient decisions that will have to be taken, and they're only good for the future. Practically speaking, there's never a good time to do something like this. But whenever you do it, it will lead to better results, I'm pretty sure. And I think it's a positive development, and it should be encouraged and it should be appreciated, I would say.
Okay, that's a CNBC TV18 exclusive. We'll keep getting you more updates on this developing story. Moving on now, free market forces could generate as much as 8% growth for India. That is the word coming in from Larry Summers, former US Treasury Secretary. Hear out what he had to say about the India growth story at a forum organized by the CII and the Department of Economic Affairs.
I think that a combination of freeing market forces, addressing infrastructure needs, particularly in energy, addressing questions of reform in a number of key states, and finally supporting a more effective public sector could generate growth at the rate that I suggested. Obviously, it's going to depend also very importantly on what happens in the global economy, but there's at least the possibility that artificial intelligence, an area in which India ought to find ways to excel, given its facility with information technology, may be a bit of an accelerant to global growth.
Okay, all right. That is the outlook on India growth. With that, we'll slip into a break. Up next, we'll get you all the cues from the commodities market. Stay tuned for that. Welcome back. You're still tuned into Power Breakfast. Well, it's time to talk about commodity markets. A lot of action happening in there as well. Manisha Gupta, as always, is joining us with all the update. Hey, Manisha, good morning.
Morning, Sonal. Thank you for that. Well, if last week was all about the monetary policy meetings of central banks, this week is going to be all about the inflation data that we're expecting from Singapore, Australia, Japan, as well as Germany as well. So ahead of that, we've seen the crude oil prices hold on to its gains. $90 has been back. This is after Russia has banned fuel exports to ex-Soviet states. Also, when you look at the U.S. oil rig count, that has seen a decline of 8 to 507 now, which is the lowest since Feb 2022. The U.S. Cushing stocks are also at a July 2022 lows. So the markets are looking at lower supplies, lower production, lower inventories, and the demand seemingly keeping steady. The markets also are staring at a fourth quarter deficit estimate, and that seems to be supporting the outlook for crude oil prices. The most interesting has been the JP Morgan report, which says that next year the crude oil prices will trade between $90 to $110, and the prices can go to nearly $120 as well in 2025. And they have hiked expectations on crude prices going forward from here, and that clearly shows in prices today.
Okay, $120 per barrel by 2025. Thank you, Manisha, for joining us with that take and what's happening in the commodity markets. With that, let's move on because here's a special announcement. Did you know that India's cancer burden has witnessed a sharp incline, with 70% of cancer cases being diagnosed at a very late stage? With a vision to reverse this pattern, News 18 Network, Federal Bank, Hormis Memorial Foundation and Tata Trust have come together for a special campaign, Sanjeevani United Against Cancer, dedicated to early cancer detection through regular screening. Watch Sanjeevani United Against Cancer at 8:50 p.m. tonight as we embark on a journey to save lives and promote a healthier future. Okay, all right. With that, we'll take your leave on this edition of Power Breakfast, but do stay tuned. Bazaar Morning Call comes up next with all the action.